It has been a busy jobs week. We got lots of info coming out that's basically kept the market on its toes. The BLS report, which is the big one for August, that came out today, was kind of mixed. We got less jobs created than expected, and it was pretty far below expectations, which is good news for rates because it does show the labor market is softening. And the unemployment rate did move down a touch or up a touch, just depending on which model you're looking at. And that's because the birth-death model that's used to basically guesstimate the job creations continues to be in huge contrast to what we're seeing from ADP. And that ADP report looks at hard data. So, we're still seeing a bit of weakness in the labor market because most of the new jobs were part-time work, and full-time positions actually saw a loss. So that's not a sign of strength. People are either having to get second jobs or they're getting part-time work when they can't find a full-time job. But on the flip side, wages did move up a bit. In the housing market, active listings are up quite a bit year over year, but we're still well below pre-pandemic levels. The tight inventory, especially here in San Diego, continues to make things challenging for buyers, especially with higher interest rates, although we are starting to see that turn around a bit. Next week will be interesting. I'll be back with news on builder confidence as well as inflation numbers for both consumers and on the wholesale side. We'll have some bond auctions that could shake things up too. And the Fed is still weighing whether they'll cut rates by 25 or 50 basis points at their September meeting. And the upcoming data, especially those inflation readings, are going to drive that decision. Right now, the markets are expecting a 25-point cut, but it's still anyone's guess until that meeting on the 18th this month. One thing I wanted to mention was I saw a recent study showing average American renters spend over $300,000 on rent before they become a homeowner. And that's a huge amount, and it does show the financial pressure that a lot of renters are under. And that could push more people into the buying market if interest rates come down. And this is a really good stat to share with clients. So that's your weekly market update. Have a great weekend. And if you have any questions or need anything, don't hesitate to reach out.